Welcome our viewers. We are very privileged to have with us today Mr. Kunal Sanghavi, CFO HDFC Securities. Welcome Kunal.
Yeah, hi, Naina. Thank you.
Kunal, we would start with, things are, there's a lot of negativity around, there's a lot of anxiousness around, but, the security industries, stockbroking industries is doing very well, phenomenally well last year, this year. What is your feeling about it? How are you, seeing the future or the present, a little bit of past in 2020?
Yeah, so you said right, there is a lot of negativity around, and then yes, stockbroking industry is one of the industries which is having a lot of traction at this point in time, and definitely it is not necessarily thanks to COVID, but yes, COVID has definitely created some kind of a spark in something that a lot of potential that this industry brings and which has left the untapped for everybody. Wherein in last year it kind of ignited everybody to go and have a look at their investments, also look at the stock exchanges, and then stock equity investing slowly started and took off a larger pace. But also, what I see is that to tell you a little bit more about what used to happen historically in stock broking space, is there was a long way back in 90s. It was more about offshore off market trading, and there was a kind of a new and the cry trading that we all know because on word of mouth. Then it took to kind of a broker driven telephonic trading, and now we all are living in the age of internet and mobile trading. So people are able to try and access it from wherever they are. And since people have some time now because of the pandemic and lockdowns, we saw a larger traction last year. But I strongly believe, and we experienced it in the later part of the last year, that it was just a spark that was created because of the telecom and internet revolution. The bandwidths have improved, people are able to access it in a much more easier manner. So that has actually helped it to try and have much larger amount of traction. And people have been then sticked onto the platform because they see it as much more decorative and an essential ingredient in their overall human. And
Uh,
that's where we see that there is a continued engagement with the people.
Since Kunal, you're talking about technology adoption and how better bandwidth is available. So have you get into a new kind of technology investments or technology adoption that has triggered more investment in the sector or in your company in the last
Yeah,
1 year?
so that's correct. I'll give you one very simple example of, let's say, global investing. Now, HDFC Securities in the retail space has been one of the pioneers uh, anything invest into stocks internationally. And we were among the first ones to actually offer it to a lot of retail customers before few years. So now what we are seeing is there is a very high amount of adoption because all the work is related to LRS, remittance of money, then getting all the procedures done with respect to investing internationally have become so easy from a technology point of view that we are seeing a lot of people invest in the stocks. So this is one simple example wherein we are seeing a good traction also. The second is thanks to regulator. What has happened is there are a lot of regulations which are enabling technology adoption in a lot of things that we do. And we are moving away from a lot of paper related documentation which was hampering onboarding of customers. And this is just exploded. And if you see some of the statistics around it, in last 1 year only, we have seen more than 95 lakh demat accounts, which is about 18 to 20% of the overall demat accounts done historically in so many years, in few decades. In fact. Now, a 20% rise in just 1 year is done in so many decades is phenomenal. And that is completely thanks to technology and the regulator who has also enabled all of that, which actually makes people to open their demat accounts and the trading account in 5 to 10 minutes online to mobile, rather than actually filling up physical forms and doing more than 20, 30 signatures that we have. So these are the kind of examples that we have, and I can like go on and on because it's completely driven a lot by technology and the adoption of internet and technology.
I also wanted to know, I mean, you are saying it's very easy for people to access, get their account started. So we see a huge amount of retail investor coming into the broking industry and, signing up their accounts, etc. Do you see the trend to continue, and why do you think, if it continues, then why? I mean, what are your thoughts about that?
Yeah, so that's a very important point you made. If you see in US, there are about 30 to 50% of the people who essentially invest in. If you see similarly in other countries, the number is very high. If you see in India, this number essentially is hardly uh, 2-3% of the overall base that we have. So that's in itself and completely unpenetrated segment is there, and there is a huge opportunity there. Now, if we look at the reasons why this didn't happen, because we are talking of numbers and numbers are phenomenal, India being highly populated country amongst one of the second largest of the globe, the philosophy and overall pattern has to mimic in India as well. But there were reasons why it was not happening, and one of the reasons was that a lack of awareness and interest, which is that. So people were not aware about equity. They used to think equity as a risky asset class. It was so much more of an alien to them when they go to tier two and tier three. Now, if you see, thanks to people's adoption of internet and social media, there is a very high amount of awareness that is possible to be spread to people. And this has actually led to a lot of people starting to get a lot of knowledge around it. And due to that knowledge, there is a conviction that is built, which has given them some kind of a trust in the sector. It's not because of an kind of a risky ness of the asset which people have done away with, but it's more because they have now understood it better. And that has led to a lot of adoption. And as you naturally see, equity is one of the fairly popular asset classes across the globe, and then hence people have to adapt it in sooner or later. So I believe strongly that it is about this awareness that has got created thanks to the internet boom. Secondly, obviously technology has helped to make the onboarding easy.
Mm-hmm.
It has completely made sure to get few OTPs, get going in 5-10 minutes. So the hassle to onboard, which people don't want to pay, and there is a lot of resistance around it, which is a silent resistance, means people want to open, but they don't actually end up doing it because they don't want to spend around. It's gone. So people
Correct.
just get onboarded. So these are the reasons I see there is a huge opportunity, and as more and more awareness is spread and more inclusion happens, I call it financial inclusion as well, because now it's getting into tier two and tier three of the overall economy. I see a large opportunity there, and there.
So, Kunal, you have a vast experience in the security industries, and you have, witnessed the 2008 crash, and 2020 also started with a crash, and then it revived, right? But there's a lot of difference into 2008. That was a financial crash. This is health. So, how you think that the industry navigated? I mean, what is the difference when how the industry navigated then to how the industry has navigated now? Because now it's such a success.
Yeah. So that's very correct, and what you are telling is very right. See, I strongly believe one of the things is that if you see by the end of 2019 and early 2020, I believe economy was not in that a great shape. First of all, and then it required a lot of stimulus anyhow, with or without pandemic. Pandemic has invariably provided that stimulus and liquidity to the economy, so economy has boosted. That is one of the key reasons that has happened not only now but also globally. So that's one of the very important things that one should know, why did 2020 did such a rise or a surge in the overall stocks going up? So that's one. The second important reason that you see in 2020 is that just before April of 2020, somewhere in February month, there was also a sharp fall. So it was
Correct.
also about a little bit of a revival that had happened. So it was not necessarily a success, but it was a revival wherein people really became very quickly comfortable with respect to the pandemic scenario and did get a visibility that we will be very comfortably out of it in short span of time. So we will be able to get through this. And the moment that sentiment flowed, there was again buoyancy in the markets. No doubt, governments globally have done phenomenal jobs to revive back that confidence. The third thing essentially is on credit. There was a very strong belief that there will be defaults and there will be credit issues, which essentially did happen, and governments and economies did more than enough to make sure that there are no credit defaults. So that also led to a lot of confidence coming back in the overall ecosystem. So these are the kind of reasons wherein there were proactive steps which actually boosted the confidence and people were able to come back. Now, if you talk of markets, how did they perform and what happened, how it was different vis-a-vis 2008 and
Correct.
2020. So I would just like to highlight one interesting thing that happened. In 2008, everything was bad. If you say, and then the revival was like everything again revived whenever it revived in 2009, 10, and so on. Okay, it was like a depression. It was a sharp fall altogether that we all saw, right? But if you come in now, essentially we have seen an uptick in select sectors. Markets have actually been able to reward what is really good, and market has not really taken up things which are really not going to take an uptick. So there are sectors which just didn't revive, which didn't participate in this rally, and then there are sectors which actually did very well because they are naturally good. Like we saw technology doing phenomenally well, banking doing very well, pharma doing well for all the obvious and right reasons. There is a lot of pharma required all across. Again, with them, markets has been able to look at companies as well. So that's a fundamental difference, and I believe I attribute a lot of this fundamental difference to the kind of analysis and the knowledge that people have gained over the years to do much more right things rather than just taking it head on all across, either beat everybody or take them by the bull by the way they is coming. So that's a very interesting thing the markets are doing, and I'm very happy with that.
Kunal, now there are many, I mean, quite a new few people are entering the stockbroking industry. So you have a lot of private players, and then there are there's your competition who are, bank-based brokers. So what are the advantages, competitive advantages that you have from, the private brokers which are not backed up by banks?
Yeah, that's a good question. I would say that directly it's a sort of competitive landscape as to where do we have. So, see, if you go in any industry, there are predominantly I categorize in any industry I categorize companies and players into two broad aspects. One is who are premium players and one is who are non-premium players. So I don't necessarily call anybody discount or anybody traditional. One is who are non-premium players. So we essentially fit into that premium space where we try to uh, give the best of the things to the customers, right? Starting from best of the services, we give uh, all kinds of advisory, we give best of platforms which is there in the system. So all of that is available. As against the non-bank based brokers which are there, which also tries and gives a lot, but essentially there is a lot of disparity in various things that we can be doing. So there is a lot of in-person servicing that and that brings a lot of trust to the customers. So we a lot of traditional brokers actually operates through a B2B model, and the clients are actually left on the sub brokers to try and attract or probably try and get them service, which is essentially quite non-standardized in nature as well. So here essentially we are predominantly a B2C player, and we are actually in a manner trying to make sure that the customer servicing is way more standardized. All the customers are actually able to experience the kind of servicing we want. So if you see from our last few years, there are a lot of non-bank based brokers who are
That's
actually
right.
trying to mimic the way in which a bank based brokers were, wherein they were predominantly functioning in a B2B environment, now trying to see and make their mix more into B2C. And I believe it's a great transition from them, if at all we are actually able to transition. Because it's not an easy journey, it's, you are doing completely different things. Earlier you were dealing with business associates only, now you have to deal with the end clients, and that's a different skill set altogether. We have a competitive advantage there that we are always dealing with direct customers, and we have strong B2C presence that we have, and that actually gives us a much more heads up advantage in terms of dealing with customers. That's a one difference. The second essential difference that comes is, see, we are essentially trying to make sure it is a win-win for clients. We predominantly work in a manner which is also way most harmonious to the client in terms of its overall risk appetite. And that is the reason why you see a larger amount of equity business, investing business rather than only leveraged business. Wherein a lot of other traditional players, they try to harp on the derivatives and the leverage business only. We are also present in that space, but our larger thing is way more conservative, it is way more subtle and way more investor friendly. So these are the kind of subtle things that differentiates us. And then lastly, I would say there are a lot of things wherein we focus, like say the global industry, smart ETFs kind of things. We enable basket investing. Then essentially we do a lot of things around taxation for the customers, NPS, then mutual funds and direct. So these are the things also we focus a lot, which essentially tries and makes a complete 360-degree kind of a requirement fulfillment for investors, rather than predominantly only focusing on broking and maybe say at times to a certain extent a larger amount of journey. So we have large customers with a decent volume rather than few customers with very high leverage volumes. I would also put it that.
Sure. See, stockbroking is a highly regulated framework, right? So, I wanted to understand as a CFO, what are the different kind of risk that you perceive, and what are the tools that you take to mitigate them?
Yeah, that's a very good question. And again, I would say that people rely us for trust, and that's where risk identification and mitigation comes at one of the top things. So, primary the thing that we try and focus on internally is liquidity. We make sure that we are having sufficient amount of money, network, and borrowing lines available to make sure that we are able to fulfill any kind of requirement that comes, which does not takes us down just on account of kind of the money liquidity that happens. That's one. The second important thing is a lot of things to do with frauds. So this industry is highly susceptible to frauds. There are a lot of unauthorized trades that can happen. There are stocks which are lying in your deposit, and the custodian of the stocks needs to make sure that client is well serviced with whatever requirements he has within the industry. So we make sure that we are very strong on compliances, customer services, our processes related to it, so that customer is very feels actually very safe and secure around this kind of areas. So that essentially reduces the overall fraud. Like one of the things that we do is we do a lot of reporting to customers on a regular basis, including sending a lot of SMSs and maybe say proactively sending certain ledger statements or their account statements, depository stock balances, so that the customer is proactively informed, and if he sees any discrepancy, he is able to proactively come back and resolve it. This actually reduces the chances of any kind of frauds. So if that's reported early, if that's reported early, it gets detected. And so therefore, if you see, we are one of the lowest kind of a customer complaints that we have. So frauds is an important area. I believe that really are on always on top of it. We make sure that that does not kind of take back the investor confidence. Investor always feels. And then probably there are a lot of market risk that one needs to look at, wherein we see a lot of gap up, gap down that happens, and any event happening anywhere globally, even something happening at night, will essentially try and do a gap up, gap down kind of scenario the very next day. So that needs to be managed very well, and that's why we have sufficient amount of haircuts to try and ensure that nor any of our clients nor we do any kind of loss or kind of and we are fairly and then over and above that we have sufficient margin from the customers. Obviously that exchange describes and we ensure that we kind of adhere to the key and so that it is not turning out to be any unleveraged kind of scenario. So these are the kind of things essentially that one has to look at to try and make most of.
Absolutely. So, you have, as you said, that, you're taking so many steps to ensure that the frauds is less and, the securities are tighter. But, you have so much of customer data and there's so much of, things we keep on hearing that, the data leakages are happening and India is getting into a data privacy law. So, how do you manage data securities? So, what is your outlook towards data security, as a growing company?
So this is a very important thing that we have seen around also. That makes sure this one of the top priorities. So we have a very strong cyber security teams and essentially we try and set up a lot of firewalls. Essentially for technology sure. Then they are validated a lot of systems on that happens to make sure that not easy for anybody can come and hack it. That is almost impossible. Because the kind of firewalls and encryptions that are done is something to ensure that we are nowhere compromised uh, so that our customers always feel secure.
Sure. Also wanted to know from you that we are again having a huge surge of COVID-19 cases across the country. Things are looking a little bleak this month of April. So how are you ready to face if there's new challenges comes up? So what are the new things that you are doing to ensure that the industry is afloat and you guys are you know managing that risk well?
Yeah, so that's correct. There are two or three kind of risks that essentially emerges out of COVID. One is predominantly the macroeconomy, how essentially it will shape up. So definitely one needs to look at which sectors may get impacted and accordingly try and ensure do the adjustments. The second essentially are the things with respect to how you internally try and strategize your functioning to adjust to COVID. We are very thankful that we are a service industry, and I always think that what must be happening to a non-service kind of an industry, the service industry can function through a work from home with connection of internet and a lot of secure methods of connecting and etc. So we are functioning with that kind of a methodology, and our people are working from home, and we are completely functioning from that. Well, and then there is a lot of initiatives that are done internally to make sure that people are comfortable working from home. There is no as such a disruption in the overall way in which we service our clients and our operations that we try and do. So those are the kind of steps and the adjustments that we are constantly doing. And we are trying to make sure that we provide infra whosoever is required even at home so that they are comfortable and are able to try and complete their work from there, but not necessarily pushing people to try office and try work because we want to make sure that people are quite well and safe. So yes, but nothing related to if you ask me from a financial perspective, COVID brings any kind of a deficit. The answer is no, at least not in our industry. I know in lot of other industry, there is a lot of liquidity problem that emerges because of COVID. We are just thankful at least we are not in that.
Thank you so much, Kunal. Thank you for taking time us to speak to us. Time. Thanks for taking time out, and all the best to you, and stay safe.
Pleasure speaking with you. Thank you so much.